In this video, I'm going to show you how to draw consistent and mathematically backed supply and demand zones, so you're not eyeballing, guessing or struggling in a live market. So you must have had it where you've drawn out your zones for the day, you're anticipating that price will tap into the zone to maybe, for example, in this example, go short. Price comes and then wicks off of an area right below your zone. And you're thinking, is my zone too small? Should my zone have been down here? And now if it was down there, I should probably be in this trade, right? This is a constant issue and problem I see with most traders. Now, whether or not this trade is profitable or it stops out doesn't matter. What matters is what has just happened. Now, I can guarantee you didn't test like that in your backtesting. The problem I see with most traders is they don't have a repeatable way to draw their zones. And if you don't have a mathematically backed, repeatable way to do that, you will not have a reliable data set. So in this video, I'm going to show you how to fix that. So what we have here is the high and the low of the previous day, and that would be Monday the 26th. So you can jump on and have a look at that day after the video, so you can sort of follow along, test it for yourself. And what we're going to do is we're going to take the high and the low and divide it mathematically into 5 equal zones. So all you need to do this is grab this table icon from the side here, and we're going to draw from the high down to the low. But what you need to do is just add on a couple of rows. So we have 5 zones. Okay, and we're just going to draw down there. The problem with most traders is they get the external part of the zones correct, but it's the internal part where they mess up. Okay, so now we're going to draw our zones onto the chart. It's simple, right? So we're drawing from the day before. So we have supply and demand zones here drawn on. So they are mathematically perfect. This has divided that price action up perfectly into 5. And stick around, because after I show you the simple explanation of this, there is a more advanced explanation that will give you where you can look to take price to different levels and take profit at different levels, so it helps your trade management as well. So we will draw across to Tuesday here, and we will just get rid of this little table now. We have our zones structured, and we are going to look for, in the next day's price action, a reversal here, potentially a reversal from here, or a continuation, and price is busting up. You'll see how these zones are now respected and how it helps your stop loss placement. Let's go. So we'll be trading in the US session, for example, for this, and we've busted out, so it's looking like we're probably gonna go for a continuation. What you can do, you could set a limit order with a trade ready here, for example, right? So we've tapped in, right? Now, depending on what your profit target is, it doesn't really matter. What matters is that we've now divided the chart up mathematically without having to do loads of maths, just using a simple table on TradingView. Let's just play this out, speed the tape up for a sec. You can see now that how this can easily end up a profitable trade. Great, 2.2. Now, let's get into the more complex version. You can see I've divided this chart up in the same way we just did, taking that table and then creating our zones from that. But here, I've divided the chart up into a classic supply and demand hierarchy. So you have extreme supply, your midpoint, demand, and extreme demand. Again, this has been taken from the high and the low of the previous day's price action, and that's taking everything into account. Asia, London, New York. And what I'm going to do now is, again, show you the amount of potential trade opportunities you have by doing this. Speed it up a little. All right, so you could potentially have taken a trade at a breakout here. You could set a limit order here. But let's just say we took a trade at the breakout, stop loss, obviously at the bottom of the zone. And you could be trading it up to the top of the zone, to the internal structure of the zone, to maybe match the high here or the high of that price action from the previous day. As you can see, it would have tapped back in. So if you did set a limit order there, that would have obviously come in as well. And yes, price is busted up for a 2.27. So that's trade opportunity number 1. The next trade opportunity, price reverses here. And you see how it's respecting these zones already. Stop loss, obvious place. Waiting for price to break the internal structure of that zone to give you maybe a trade signal. Again, this is not a strategy, but this is showing you a way how you can profit from the market. Maybe we trade it down here, maybe we trade it down there. Let's see how it plays out. Okay, trade's down to about here. Price looks like it's reversing, right? So you could have had a trade there as well. You could also have had a limit order here, again, to trade long if you feel like price is in an uptrend and we are bullish in the market. This trade here, a little bit different, because what we're going to be doing is showing you how you can take this supply and demand hierarchy from the day before. And when you are in a continuation trade, you can then apply it to price action that's to come. So then you can take profit at levels after it's left your supply and demand zones. So I'll show you this now. Really simple. Okay, now price has completely left the zones we drew out. Like anyone, you're wondering, right, I've got these supply and demand zones, but where do I take profit now? How can I maybe add a little onto my winners and capture more profit? What you want to do is simple. We again are going to look at dividing this back up into 5. Pull that down there. Okay, so we've measured that back out, right? And now what we're going to do is just take it and then extend it above. And then we'll just quickly put in a few lines here to help with profit taking. This is mathematically divided up for us. We didn't even have to do that work, which is great. There's loads of great little features on TradingView like that. What you could do, for example, is create a little stop line here. We'll call this our stop loss for the moment, stop loss. And what we're going to do is trail our stop loss. We now have developed a mathematical way of doing this so we can capture a bit more profit out of the market. Let's see how this plays out. And now, obviously, you've got a strong close in this zone, so there's no reason you couldn't have your stop loss at this midpoint. And again, we've just had another strong close there. No reason the stop loss couldn't be at this midpoint now either. So you can see how much we've already extended this trade by. And let's see what happens. Oh, we're going to close in another zone. Looks like maybe starting to reject, but not necessarily. Okay, and then price just came down and took us out there. But you can see where maybe you had a trade before of a 4, which is a great trade. Don't ever think that that isn't. We've now extended that trade up to a 5.5, which is a massive increase. Imagine if you could do that on all your continuations. Having a repeatable structure like this will certainly increase them chances and give you reliable mathematical data that you can trust. So you're not going to be having a successful backtest where you think you're going to be profitable and then you enter a live market and get completely wrecked. If you are here trying to learn how to trade, refine your strategy, solve problems that you can't quite work out on your own, then this is the channel for you. And if you do need some helpful tools and resources, links are in the description. I'll see you in the next video.